Good morning, traders! Welcome to the Elliott Wave Theory weekly update. I'm Juan Maldonado, and this week we are going to check the euro dollar, the euro yen, the S&P, and oil. So let's start. Alright, here we have the euro, and before we start, we are going to host this Thursday at 9 a.m. EST a webinar, a free webinar to talk about the Elliott Wave basics and application. So if you are looking to learn how to apply the Elliott Wave theory, this Thursday, November the 9th, and at 9 a.m. EST, we are having this special free webinar. I promise you are going to learn all the basics of the Elliott Wave theory, and at the end of the webinar, you are going to be ready to start applying the key concepts, the basic concepts of the Elliott Wave theory directly in your charts. So here is a link. ElliottWaveStreet.com/free, and you can sign up right now, completely free. All right, traders. So this week we are following the trend on the euro. We got last week good news in terms of risk. The inflation seems to be lower thanks to oil. We're going to check that as well. And everything in the risk world is flying. So here we have the euro, and we have this nice rejection. The price was able to show us this great setup here. Then we got the price moving higher fast. The price crosses this high last week, this part of the trade complex. And today we are looking this week for a discount, to have something here to give us an edge where we can continue following the trend at least for one more leg up. So looking for this little pause. One of the key things that you need to focus in your Elliott Wave career is looking for zigzags. You need to become a zigzag expert in the Elliott Wave theory, because it looks simple, and it is, but also you need to check out slowly some key things about the zigzag. The first thing is the speed. The zigzag, it needs to be slow compared to the previous move. The zigzag, we are going to label the zigzag as an ABC, and we need to measure the distance between the wave A and the wave C, and it needs to be quite close to the wave A. So there is something related with momentum as well here. And the third part of the process is understanding the validation of the setup, because, for example, here we can have a nice validation if the price rejects. Let's say if the price starts showing the rejection, at that area is where the trigger is going to happen, not before that signal. So those are the three key concepts regarding the zigzag. And when you practice, and no matter the time frame, no matter the instrument that you are checking, you practice, you are going to start getting some fantastic setups. So that's the plan on the euro. Let's have a look at the euro yen. On the euro yen, we are looking for a sell trade. Actually, we already trigger a sell trade. This is a liquidity zone. This is a liquidity area, the one that we are seeing here. And at each high, significant high, market high or low, we are expecting a reaction. That reaction could be a continuation, could be a bullish breakout in this case, and the price can continue higher, or it could be a reversal. But at least we know that that's the area where things can happen. So in this case, on the euro yen, we're finding this week the end, the completion of wave 3. We already have the first rejection. That's why we're already short in this first trade. Sometimes we need to trigger twice or sometimes 3 times, depending on the noise of the market. But we continue triggering in case that the price hits the stop, if only if the trade keeps making sense, right? Like the speed of the setup and everything. So what we are looking this week here on this first rejection is to have an impulse. It's extremely early. This is a counter to trend trade, but what we are looking for is an impulse to confirm what we are seeing. So we can either trigger here at the highs, at that rejection, at that demonstration of supply that is happening today, or we can wait for the trend trade that is going to happen after this zigzag. So we could have one or the other, right? And then after the zigzag, the leg down, and we can have a minimum target at this liquidity zone. We need to check what is going to happen here once the price gets there. You know, it's going to cross, it's going to bounce. What is going to happen after the price reaches this area? That's the question. If the answer is continuation, we hold it, right? No problem, we hold it. If the answer is rejection, we have to close the trade, because the next liquidity point is going to be this previous low. So we can have all this room during the week to find those levels. Of course, once we reach the 1-to-1 in the trade, we need to book partial profits. So let's see how it's going to play out this first attempt of a reversal on the EURJPY. Again, if the price makes the high, we have the stop loss at the 10, 61.10. So if the price comes up and hits the stop, we have to trigger again at the next one, because that's the process of distribution. Sometimes distribution is quite noisy. Sometimes just with a single reversal starts the whole process, right? Like this one here. This is a great example. So look, we have the first rejection and makes another one, and from the second one is the one that departs to the downside. This is a great example of counter trend trading. The first one probably comes to the stop loss. The second one triggers again the trade, and we can capture the whole leg down, right? Same here in this area. Look, we have the first rejection, probably comes to the stop loss. The second rejection confirms, and that's the one which starts the move up, right? That's the process, traders. That's the process. Now, let's have a look at the S&P. The S&P is fantastic, traders. We have been looking for this bullish trade. It was absolutely clear. Here we got the first signal. Look, in this case, the S&P didn't make a second one. Just with the first one was enough. The price moves up nicely in a 5-wave sequence, leading diagonal wave for wave 1. As you can see, the wave 4 was moving inside the wave 1, and that's called a leading diagonal wave. Then the 3-wave sequence for the second wave, beautiful zigzag. You can see how useful the zigzag is. At this rejection is another signal. So signal 1, signal 2, only thinking on the bullish side of the trade. And eventually we got the home run to capture the whole move up. Beautiful trade on the S&P. Now following the bullish trend, now following the move up, and just looking for that continuation. So let's see how it's going to continue the price here, but it looks pretty good. It looks like we are going to have an interesting setup right there, and then we can just follow follow that trend. So today, the main plan for scalping is finding the end of 4. Could be an interesting setup. Let's suppose that the price sell-offs a little bit here. And let's suppose that we have here the rejection. And we start here following the move up back to the previous high. And once the price grabs all this liquidity here, it's where we can start finding the rejection, and it's where we can start finding the sell trade, and we can have a nice corrective leg of this leg up to this week. You know, that would be fantastic. If we have a good discount on the S&P this week, we can add to the position that we started before. So it's another great example of how Elliott Wave can empower your trading. It can fix a lot of problems in your trading. And this special webinar that we're having this week on ElliottWaveStreet.com/free, you can sign up right now. You can be part of the webinar, and you can share with other traders and with us your biggest fears, your biggest issues, and we are going to go through them, and we are going to discuss how to have a plan to fix those issues quickly, you know, because time really matters in this career. Oil. On oil, we have been with a short bias, has been working fantastic. Here we got the rejection, as you can see, a zigzag, and another zigzag happening here with a minimum target at the previous low. Here we have another zigzag, as you can see. And here, today, we're having another zigzag, right on the live market. So 3 setups, 1 live. Of course, we have been following in the membership all these setups, following the leg down. There is something that I would like to see on oil, is a little bit more of selling off. You know, I would like to have oil selling off and pushing lower. That would be just terrific. Having oil gaining more momentum to the downside, that would be just fantastic. If we can have oil selling off a little bit more, that would be great, like for a wave 3. That's something that I want to see, because so far we don't have a wave 3. So one concern that I have in oil is that what if the price finish building this as an ABC, and then the price reverse and starts going up to the high? That would be a horrible situation for the S&P and for the risky markets. That's why we have pending a wave 3. In the Elliott Wave Theory, the wave 3 is a strong move. You know, is that move where the price moves in one direction strongly and it starts following through really fast. So let's see how it's gonna happen, the setup right there. All right, traders. So don't forget to sign up for the free webinar this week, ElliottWaveStreet.com/free. We are going to go through the Elliott Wave basics, and also we are going to work on the applications, and also you are going to share your current issues, and we are going to address that in the webinar. Also, we have a fantastic membership on Elliott Wave Street. If you want to accelerate your career, if you want to accelerate your learning on Elliott Wave, this is a great option, because you can start from the first second you start your membership. You are going to start seeing the difference in your trading, because you are going to get the access to the community, to the forum. You are going to get access to several courses. You are going to get access to the live market analysis. So it's going to be something great, and you're going to find a lot of value inside the membership, and you can take the trial for just $19. You are getting a lot of value, and you are going to try the service for the whole month. Please have a fantastic start of your week. I'll see you inside the membership. I also with you in the webinar. Have a fantastic start of your trading week. I'll see you soon. Take care. Bye-bye.